Standard Presumptive Value, how the Texas Legislature raised taxes without raising the tax rate. First of all, what is Standard Presumptive Value, or SPV? SPV is the method by which the state of Texas calculates the amount of sales tax for vehicle sales between private parties. SPV allows the state to charge sales tax on an amount higher than what you paid for the vehicle you're trying to register in your name at the county tax office. SPV is based on data from Price Digest, a national price guide, which uses an average wholesale used vehicle value based on Texas sales data. So how does SPV work? Well, when you buy a vehicle from a private party, such as a neighbor or a friend, and then you go to the county tax office to register it and pay the sales tax, in Texas that sales tax rate is 6.25% of either the vehicle sales price if you paid 80% or more of the vehicle's SPV, or 80% of the vehicle's SPV if you paid less than that amount, or the certified appraised value if you paid less than 80% of the vehicle's SPV, and you get a certified appraisal. So why is Texas using SPV? Well, the reasoning behind this was to make sure everyone was paying their quote-unquote fair share of vehicle sales tax. Some people were claiming to have paid less for a vehicle than they actually did, which meant they were paying less sales tax than was due. For example, let's say Joe buys a car for $3,000 from his neighbor. He claims he bought it for $1,500. Joe saves 50% on his sales tax by underreporting the sales price. He saved $93.75. SPV is extremely unfair, and here's why. Let's say Joe buys a car for $3,000 and then goes to register it and pay the sales tax. If the state of Texas was honest, the sales tax due would be $187.50. That's $3,000 times 0.0625. The clerk looks up the used vehicle value in the Price Digest database and sees the car is worth $4,600 by their estimation. Therefore, 80% of SPV will be $3,680. Joe will now have to pay an extra $42.50 of sales tax. The state has increased its take by 22.67%. This is how the legislature raises tax revenue without raising your actual tax rate. Is this fair? No, it's not. Here's a few more inequities with SPV. The used vehicle values quoted by Price Digest is based on used vehicles sold at dealerships, not between private parties. Therefore, they cannot possibly get an accurate picture of what the market value of a car should be. Price deflation during a recession is most evident in private party transactions. In order to protest having to pay your tax based on SPV, you have to pay to have an appraisal done on your vehicle. The cost of the appraisal and the hassle involved most often cancels out your tax savings. Now, when was the last time you bought $50 of groceries but had to pay sales tax on $80? Well, that would be never. It's immoral to be forced to pay sales tax on an amount higher than what you paid for an item. This is no different than theft. So how can this be remedied? If the goal of the SPV was to make certain we all pay our fair share of vehicle sales tax, this measure has totally failed. We now pay more than our fair share. In order to curb cheating the vehicle sales tax, the state should simply pass legislation that requires both parties to the transaction to sign a sworn affidavit saying that the amount transacted for the vehicle was true and correct. After it is notarized, it becomes a legal document.
That's all, folks.